Welcome to this week's Market Talk. I'm Amber Lancaster, joined by Paul Mampilly and Hudson Cashdan. Each week, we look forward to sharing our viewpoints and giving insight into what's on our radar. Today's outlook is for the week of October 14th, 2019. For this week's update, I'll begin by sharing with you what I'm watching, and then we'll hear from Hudson and Paul. Today, I'll cover three major topics. The first will be my take on recent and upcoming U.S. economic releases, then my innovation story of the week with our good news roundup, and I'll end with an update on the disruptification index performance. So let's begin. Last week's University of Michigan Consumer Sentiment preliminary October report beat estimates. It actually rose to a 3-month high. The index came in at 96 versus a survey estimate of 92. And what the report showed is that there are more Americans anticipating household income growth to outpace inflation over the next 2 years. And 29% of the Americans surveyed expect to see a rise in real income growth. And this is the biggest share on record since 1978. So for this week, the important release to watch is the September's retail sales number. This number will help us gauge if U.S. consumers continue to help spur the economic growth over the upcoming quarters. In the meantime, U.S. China trade talks continue to progress. China at this point does want some further talks before sealing the deal on the Phase 1 agreement announced Friday by President Trump. So where this week's economic releases are concerned, as you can see in this graphic, there will be 5 major releases. On Tuesday, October's Empire Manufacturing reading will post at 8:30 a.m. On Wednesday, retail sales advanced month over month for September will post at 8:30 a.m. On Thursday, September housing starts will post at 8:30 a.m. and industrial production month over month for September will post at 9:15 a.m. And on Friday, the September leading index print will post at 10 a.m. Now for my innovation story of the week, Daily Bitcoin News and the Nikkei Asian Review are reporting that 5 major automakers, BMW, General Motors, Ford, Renault, and Honda, will soon be testing a blockchain car identification and payment system next month in the US. The report states that automakers envision themselves in their self-paying cars and the digital IDs in the near future for these cars. The partnership, quote, aims to test the vehicle ID system developed under the Mobility Open Blockchain Initiative founded in May 2018. And as part of the project, cars are assigned digital IDs linked to ownership, service history, and a digital wallet, allowing the vehicles to automatically pay fees without specialized hardware. The alliance reportedly envisions the system being applied to connected electric vehicles as well. So tolls, maintenance, and rest stop purchases, for example, well, they can all be recorded and paid automatically when the car is plugged in to charge its battery, end quote. So on the same topic, Crypto News is reporting that, quote, automakers are becoming increasingly interested in all things blockchain and crypto related. Mercedes-Benz, the owner Daimler, is currently exploring the idea of fitting vehicles with a digital wallet for cryptocurrencies. And Jaguar Land Rover, well, they have a partnership in place with the operator of IoT-themed cryptocurrency IOTA. The project could eventually see drivers rewarded in crypto for allowing their cars to be automatically reporting their road conditions and information through the network, end quote. So now to our good news roundup stories. Good news roundup story number 1. Housing Wire and the National Reverse Mortgage Lenders Association is reporting that senior housing wealth has reached record highs. Overall, quote, senior housing wealth hit an all-time record in the second quarter, now posting $7.2 trillion. Homeowners 62 years and older also saw their housing wealth increase 0.5% or $32 billion in the second quarter, end quote. Good news roundup story number 2, also from Housing Wire. Redfin and LinkedIn recently revealed the top 5 cities forming the new top emerging technology hubs in the US. So we all know San Francisco, California, and Silicon Valley are home to some of the most preeminent tech industry leaders like Amazon and Google. But Redfin is reporting that due to high living costs, some industry tech workers are relocating to more affordable areas. So, quote, smaller inland cities are becoming increasingly attractive to young, educated people looking to build a career and live comfortably, end quote. So, the top 5 new tech hub cities are Charlotte, North Carolina, Buffalo, New York, Grand Rapids, Michigan, Colorado Springs, Colorado, and Columbus, Ohio. Good news story roundup number 3, a Noblesville, Indiana-based spinal implant and instrument manufacturing company called Next Spine is making news. The company is, quote, looking to expand after their spinal devices started changing lives around the world, end quote. So Fox is reporting that, quote, Next Spine began 3D printing titanium spinal devices up to 2 years ago. The products replace injured discs in patient spines and promote natural healing. New bone grows in and around the titanium implants, fusing the bones together. And the high-tech devices, well, they work in a similar way to a procedure that Peyton Manning had on his spine. And they're saying that the surgery extended his illustrious career, end quote. So at Next Spine, the majority of the engineers are from Purdue University, and they, quote, have a few more products that are in the pipeline and clearing the FDA right now, and they're expecting these products to hit the market soon. So turning to our disruptification index, as I mentioned last week, the technical function used to calculate our performance had a malfunction, which we're currently working on diligently with Bloomberg to fix. So in the meantime, we are tracking the index manually. And based on our best estimates, it's up 23% year to date. So that's it from me. Hudson, please tell us what you're watching for today.
Thanks, Amber. That's interesting. I was surprised to hear about Buffalo, New York. That's an interesting one from the list. I was thinking maybe Pittsburgh or somewhere else, but the Buffalo, that's interesting. I'll have to check out with my people from Buffalo.
Okay.
This week in the IPO world, we're looking to kind of get a sense of where this correction is going to end, and I think we're coming in for a bottom here, at least in the short term. As you might know, WeWork was supposed to come to the and do a large, well-publicized IPO, and that was pulled for various reasons that we've gone over. A lot to do with WeWork's management and corporate structure that the market pushed back on, and their valuation that they were looking for that was way too high. And so that kind of got pulled, and that spooked the market. And now the markets these companies coming public have significant revenues and significant growth, and most of them are not yet profitable. But they have a plan, and the ones that we participate in have a plan to get to profitability over the next few years. But now the markets have been granting less of a grace period for them to get to profitability, which means that they've traded down, and the market is applying lower valuations to these companies, both the recent issues and the future issues. And so that's kind of one of the sources of the correction, as well as SoftBank, which is a big holder of WeWork, is also a large holder of a lot of other companies. So the market was kind of selling in anticipation of SoftBank possibly having to sell more of their stock in their existing holdings than was anticipated previously. So that's kind of caused a correction, and you could see that in this chart that we're putting up of WeWork 2025 bonds, which were issued at 7.8% and have since traded down to about 12.5% yield. When bonds trade down, the same coupon is trading for less money, which means that the percentage return that you're going to get on that is going to be higher. We think that that's probably bottomed, and I think news this weekend that's very relevant to that is from Reuters that claims that SoftBank has lined up financing to essentially take control of WeWork from the founder. And that's a positive, because that takes SoftBank's distress off the table a little bit, and investors are less worried about future selling from SoftBank. And I think you're going to see these bonds start to trade back up based off of this news, as people are less worried about um, the position of SoftBank and the IPO market generally, because SoftBank's the biggest fish in the market. They're the whale of the IPO market. So we're going to look for that, and we're going to see that this IPO index that traded off and underperformed the last month and a half is going to start to kind of reverse that, and maybe close some of that gap of performance with the rest of the market. Paul, what do you think of that?
Well, I was just listening to what you were saying, Hudson, and for some time I've been telling you that, especially for innovation companies, the public markets and the private markets have been in very different places. And so I feel like what's gone on with WeWork is going to be actually a good thing for your service, which is companies are going to come at much more reasonable values, and they're probably going to bring fewer shares to the market too. So the demand and supply, valuation, valuability, and
the companies and the venture capitalists were not leaving enough on the table. The market's saying, you're not leaving enough on the table for us. You're having us to assume too much of the risk for not enough of the reward. Now you're going to give us a better deal.
That's right. So I feel like this is actually a good deal for IPO investors, and a kind of bad deal for a lot of private investors who have counted out on getting out on very high elevated valuations. And that includes SoftBank, that they've dominated the private space with their $100 billion vision fund, which some people say have bid up private market values to unsustainable levels. And WeWork seems to be a confirmation of that from what we can see. Just moving quickly to some of the things that are in the news, you'll see that our bad news media is at it again. There's actual real signs of a real deal coming out of China, and what's on the front page of MarketWatch telling you that, nah, it's nothing, it's for you to ignore. And I can tell you that if you follow my Twitter channel, you'll see that there was actually macro news out of China. China is struggling. They had the worst industrial production in 20 years. Worst industrial production rate. Of course, we're hearing none of that. So in other words, they need a deal sooner rather than later, which makes sense if you now think of like what the news that's coming in on there. Want to as well cover a sector that we've really, since Ian has started doing his own thing, he does it on Fridays. You guys should check that out on Fridays. Where he does a phenomenal job of covering things like Bitcoin, Tesla, and pot stocks. But I want to cover pot stocks today because there has been an implosion in pot stocks. Pot stocks have just been crushed. Looked it up right before getting on, and pot stocks are down nearly 60% this year. So I'm using the most prominent ETF, which is the ETFMG Alternative Harvest Pot Marijuana ETF, down almost 60%. However, that really doesn't do justice to how much these have gone down. Some of these have declined by really 80%. And in my experience, 80% is the moment where either that market is really done, it's a dud, it's a fake, it's going away. Otherwise, the true believers, the people that are willing to come in and buy because they believe in the market, they come in and they start buying, they start acting as the strong hands. And I believe we're very, very close to that moment for pot stocks. And so this is a moment for me to throw in our shameless plug of the week, which is that if you'd like some unbelievable, incredible pot stocks, yes, they're down. However, we believe in the what I'm calling the new vice economy. In other words, the old vice economy is slowly fading away, and that's alcohol, cigarettes, and it's being formed by a new vice economy, and pot is at the center of it. It's going to take the big share of it. And if you're interested in two stocks that are currently in the portfolio, which are both down, however, we believe that these companies are going to make it. And Ian and I, who manages the $10 million portfolio with me, He's looking at new pod stocks because everything that we see in terms of growth, in terms of the product, and also the huge event that's coming, which is full legalization, is still ahead. So we're still optimistic on pod. We still think it can grow significantly from here. And so if you're interested in that, just go ahead and click on the strong hands that's right there. And that will send you to a page where you'll get all the links on our unbelievable, phenomenal $10 million portfolio service that, in addition to pod, has graphene stocks, new energy battery stocks, and so much more. This is our most incredible service that gets you in on the ground floor of some incredible innovations. So check into that. Finally, also want to mention that just like what Amber was talking about, last week I told folks about really what is going on in our economy, in our markets, which is there is a shift that is going on. For many years now, we've seen what I'll call software-y tech really lead both the markets and to some extent the economy. However, what is happening is that all of that activity, which has sort of been on the coasts, is sort of now moving into the center of the country. Last week, I told folks that the new big trade is in industrials. In other words, the Internet of Things, artificial intelligence, and as Amber was talking about blockchain, these things are all going to be embedded everywhere, into machines that are all around us, into roads, into bridges, into doors, windows, everything that you can think of. And that is going to happen through the industrial economy. And so, which makes total sense to what Amber is talking about. People are seeing that and they're like, hey, I can see that we're making something valuable. I can see that my company is growing. They feel confident, which is why they believe their income is going to go up. And this week, I'm going to tell you the other place that you should be buying into that is also driven by this. So check into my Bold Profits Daily tomorrow, where I'll tell you the other place that you've got to, absolutely got to be in to benefit from that. So that's all I have for this week. And back to you, Amber.
Thank you, Paul. Thank you, Hudson. Great ideas and insights. And we look forward to your article tomorrow in Bold Profits, Paul. And thank you to our viewers for tuning in. If you like this channel, the Paul Mampilly YouTube channel, please go ahead and subscribe or share or thumbs up. Tell us how you feel about what we're talking about today. So until next week, everyone, take care.